Welcome back to Next Gen Investing. Alex Coffey, Kevin Green, and joining us now, George Tsilis, Senior Markets Correspondent for the Schwab Network, to discuss, for our under 30 segment here, Oklo. I know we've talked this one before, George. It's been exciting. Yeah. I know it's not at all-time highs, but this is an exciting rally, even in its own context.
Yeah, it is, and it's getting interesting. I think there's a lot of positive catalysts for Oklo and the other nuclear companies out there, and it's also very positive for the nuclear energy industry, particularly the utility companies like Constellation out there, because of the fact that it seems like the Trump administration is going to potentially push forward some executive orders and maybe even some subsidies to restore the nuclear energy industry in our country. And if you think about what's happening, and we talk about Oklo, and it's important because if you look at what they do, this is essentially a company that is in the development phase. They're looking to get regulatory approval from the Department of Energy to deploy their small and modular nuclear reactors for on-site marginal demand for electricity. And all this technology makes a lot of sense because you can't increase the supply of electricity quickly. There's just too much red tape, too many regulations, transmission lines, right-of-ways, you just name it. But the demand for electricity has been rising because these data centers use a tremendous amount of power. So one way to increase at the margin the on-site electricity production for on-demand needs to bypass the traditional transmission grid is through these modular reactors, which are deliverable and on-site reactors. But this is a company that's still not generating revenues. That's something we have to keep in mind here. They're not expected to generate any revenues for what it's worth until 2027 or even 2028, pending regulatory approval. This is a company that has, passed its initial design phase. It just has a lot of regulatory red tape it needs to go through. But I think this is an interesting space because I think we're probably going to see a secular shift in how electricity is produced from the standpoint of the households, maybe more solar and on-site production versus the transmission grid. And one way to also bypass the transmission grid and, of course, increase prices if you're a seller of transmission is to have it off-grid, because public utility companies have restrictions, regulatory restrictions on how much they can charge for electricity rates. They have to legislate rate increases. And it's a slow process, but the demand for electricity is high, and this is one way to bypass those supply constraints.
So, George, I mean, a lot of these names are really kind of focusing on the data center aspect. It seems like that's really kind of getting that, a lot of the attention right now. But can you kind of talk about maybe some of the other applications that these modular nuclear reactors could actually, and how it can actually impact us here in the United States, just in general, outside of just data centers alone? Because it seems like that's already been baked into a lot of this price action.
Yeah, so you just think about traditional nuclear energy production or generation. It's on site. You rely on a lot of fixed capital. You rely on the transmission grid to deliver it. So one way to increase the amount of electricity without building new reactors that are very large and scalable is to bypass the traditional transmission grid and move them to an on-site location. So it could come down to industrial applications, factory automation, industrial and manufacturing clusters, warehouses. But I think these are other areas that these technologies are poised to potentially increase the yield of electricity supply by bypassing the grid. And this also increases the amount of independent power producers that can supply the marketplace that aren't restrained from the pricing structure of regulatory commissions and, of course, the public utilities. Mm-hmm. So I do think it's interesting, but it's still nascent. We're still developing these on-site reactors, and because there's a lot of other things that we have to consider that are barriers. There's regulatory risk, there's safety and waste disposal risk. There's also national security risk because you're dealing with nuclear material. So there's a lot of factors involved in this industry space as it's evolving. But from an engineering standpoint and an economic standpoint, this new technology makes a lot of sense because you're increasing the yield of production and lower cost to deliver on site in high demand, high electricity need areas, particularly data centers and manufacturing. but you also have to consider that you're dealing with a national security risk as it's nuclear material. And so that has to be ironed out if it's, again, feasible with the expectations in 27, 28. And I'll say this lastly, this industry has got a lot of companies, and Oklo as a company, right now the market cap is close to $7 billion, no revenue. So that's something you have to keep in mind. But the cash burn for the business is around 60 million. Mm-hmm. So if you just do some simple math and you take the market cap relative to 60 million cash burn, the negative earnings yield right now for the company at the current pace, all else equal, is less than 1%. So pre-revenue companies, it's important to consider the negative yield, the ratio of negative yield of earnings to market cap. This company, it's relatively small. I'm not saying it's a buy, but I'm saying that the risk of dilution at this level, at this point, is relatively lower than, let's say, another company that has no revenues and is burning a tremendous amount of cash relative to the market cap.
All right, so George, follow up to that, because that was going to be where my question was going to go. Pre-revenue, zero revenue company. You kind of walk through the math behind the dilution, which isn't as concerning as others we've talked about. But isn't there still a leap of faith that, one, this works, two, they're going to meet their time frame, and three, all those other things from regulatory and clearances that they're going to need, that they're going to actually meet all these guidelines? Isn't that a pretty big leap of faith?
It is, and that's the risk. And so you have to consider there's a lot of risks. And again, just because something works from an engineering and physics standpoint, as well as how economic it will be for distribution, there's a tremendous amount of red tape and regulatory risks you have to consider. This may not evolve into something that's feasible because of national security and dealing with the Atomic Energy Commission as well as the Nuclear Regulatory Commission of the United States. So keep that in mind, but there's obviously a tremendous amount of momentum, and the stock keeps moving above the 10-period moving average. And if you're trading it, you could certainly consider that as a benchmark level of support. If it breaks it, put a stop loss in if that's the way you like to trade.
All right, George, we got to leave it there. Have a great weekend and enjoy the holiday, and we'll catch up next week.